morning to everyone here, and very good evening to Professor Krosinski. With great pleasure, we welcome you to Maybank's flagship event to talk about everyone's either most loved or most hated subject of ESG. A very wide-ranging discussion, I would say. A lot of topics to cover, and we hope to get a lot of insights from you in the next 40 to 45 minutes, followed by audience Q&A. I would like that we start with a bit of your journey in the ESG world. You have been in the ESG field as a practitioner for the last 2 decades. You have authored several books, and you have consulted several corporations. So would like to know more about your journey and how you still remain optimistic in the middle of so much controversy and negative emotion. Just one thing this morning when I woke up and saw the headline, I felt good. It brought a smile to my face. The headline read, anti-ESG funds failed to find traction in the US. So that was a nice one to wake up to. And now over to you, Professor, for your background, introduction, and a bit of your journey. Then we'll get into the granular Q&A.
Thank you so much, Jigar. It's wonderful to be with you and to be with everyone here. Just to give a bit more color as to how I came to be where I am.
You're on mute.
Can you not hear me? Can you hear me now? Can you hear me now?
Professor, can you hear me?
I can hear you. Can you hear me?
Don't think he's able to hear us.
Can you not hear me now?
Yes. Thank you.
Great. Yeah. Sorry about that. I'm not sure what happened, but I was just trying to say that actually it's a great honor to be with you, Jigar. I really appreciate the invitation. Wonderful to be with everyone today. So let me give you a bit of background on how I came to be where I am. Actually, the people in this field, and I would imagine it's true for you as well, Jigar, is that we're people who care, and we're driven, and we make things happen if we can, as we can. And so, my background's actually in computer science and in the management of business information. And it was about 20 years ago that I started to look at mutual funds like the Jupiter Ecology Fund, and noticed that there was an investment vehicle that was actually trying to solve global challenges like climate change, like pollution, helping people, all the things that we all care about. All people care about these things. And so I watched these funds 20 years ago. It turned out they were outperforming financially. So I got excited. Maybe there's a way for sustainability and finance to run in parallel and to provide better outcomes as well as better financial returns. And that's actually formed the heart of my teaching and my writing. We've done 7 books, and my ongoing advice. Actually, the most recent piece we did was research at NYU showing how active sustainable investors have actually been financially outperforming for all of the anti-ESG rhetoric. There's a danger of leaving returns on the table if you don't make sure you're participating in the secular trends of our time. So my journey has been a long, evolving, consistent career, one that's led me to be a frequent teacher, and I've really come to love teaching, as I'm sure you know. So it really is wonderful to be with you here today.
Thank you, Professor. We'll go ahead with the questions. As you know, the theme of today's discussion is about whether ESG is still relevant with so much criticism coming its way, especially since the onset of the US, the Russia and Ukraine war, suddenly the energy security and the hunt for fossil fuel came back. So we are seeing a lot of fossil fuel coming back. We're seeing controversies very regularly on the nuclear and on gas. We are seeing corporations dropping out of G funds. We are seeing flip-flop on the fund labeling rules by the EU. We are seeing political backlash on ESG in the US. So several criticisms question the kind of credibility that ESG built over the years. So where are you on this entire debate with that anti-ESG sentiment, and how you think the dented image can get restored? How you view all this to pan out in the short and medium and long term? So your thoughts, please.
Absolutely. Absolutely. I'll try to be as concise as I can. There's a lot to say. Probably three things to say. Number one, the anti-ESG sentiment, at least partly, is a result of it starting to become effective, meaning sustainable finance. And there's always going to be winners and losers with any transition. So this was to be expected in many ways. But let me just quickly say that, the second of the three things I wanted to say is that there's some great misunderstandings about fossil fuel and sort of the ESG movement as it stands. When we teach energy studies at Yale, for example, we're very clear-eyed and realistic about the transitions that need to happen over time and how challenging transitions will be, say, in Indonesia and Malaysia, for that matter. And the reality is that we need fossil fuel. 85% of annual carbon emissions come from the use of fossil fuel. And so it's always been the case that we were only going to solve climate change if we actually solve the demand challenge. Since we need fossil fuel, we should go after it and go after it efficiently because we need it. So that's one misunderstanding. The third thing to say is that what we like to call the 3, 5, 7, 10, and I'll start with the 10. There are 10 misunderstandings about ESG that we've been talking about recently. Number one, ESG is not a single thing. I don't know why the media has been arguably somewhat lazy about this. And, environmental, social, and governance issues present risks and opportunities. And within each of those three pillars, there's all sorts of different issues. Water, pollution, climate change. The list goes on and on just under the environmental side of the equation. The social dimension has many different aspects as well, all of which present potential risks and opportunities. Brands that, like Nike, that had accusations decades ago, lost half of its value. And so the first of the 10 misunderstandings is that ESG is not a single thing. It's actually a long list of different issues that are real. They cut across things that affect all of our lives and our families, and they present real risks and opportunities that could cause a portfolio to lose half of its value if not managed properly. So that's just number one. Number two, the ESG data conversation is important to really be realistic about. Data can only help so much. It might be able to help with downside risk management. It doesn't really tell you that much about the upside. And so as a result, number three of these misunderstandings, we believe, and we've been part of this long ago, that the ESG data as the only solution can be oversold at times. We have to be careful about where we use the data and what are we using it for. Number four, the same is true of standards, to your point. Standards, we have to be realistic about what they can and can't do. We've seen this in the EU, as you mentioned, Jigger. Absolutely, it can be a struggle, and we can't just rely on standards because they can only tell us so much. For example, if climate change wasn't financially material for some sectors in the past, well, climate change is going to be very serious in the not too distant future financially. So relying on a materiality lens from a standards perspective isn't sufficient for solving the problem. Number 5, we believe this is true of the TCFD also, the Task Force for Climate-Related Financial Disclosure. It talks about the need for corporations and investors to disclose their physical and transition risks, doesn't necessarily solve the larger problem of how are we going to enable the necessary transitions on a global basis. Number 6, with all that said, we appreciate the push for more transparency because we've seen that with large corporations and investors. It encourages action. Number 7, the same is true for somewhat vague net zero commitments. They can also catalyze the need for action and the development of related strategies. Number 8, we reject the phrase ESG investing. That's become du jour because, again, there are many different sub-strategies that investors are using. They're quite different one from the other. That's the 7 of the 3, 5, 7, 10, what we call the 7 tribes of sustainable investing. We can talk about that as well. Number 9, we're fine with accusations of greenwashing because ultimately, if we're not delivering positive impact, then that's what are we doing? So greenwashing accusations are fine as far as we're concerned, as it encourages relevancy and actual impact and actually making a meaningful difference with our investments. And number 10, we believe that we've had these conversations a bit backwards. It isn't so much create an ESG database and then figure out what to do with it. Rather, we need case studies of investment success that can be scaled for purpose. So we believe there are many misunderstandings about ESG out there, and the criticisms don't hold muster when you cut through all of the noise. We can talk more about the rest of the 3, 5, 7, 10. I don't want to anticipate your questions, but I'll make sure we get to that as we go forward. Thank you.
Thank you, Professor. This gives me a good segue into the next question. And while I know when you were teaching the course, when I was your student, you didn't like using the term ESG investing. You still don't, and I can see the reason why. But the street has definitely taken a liking to that, and we are seeing a lot of active ESG strategy funds. We are seeing a lot of funds aligning themselves to some kind of ESG matrix and performance ratings and so on. What we have seen is in the past 1.5 years, the theme is becoming a little bit diminished. We see contraction in the size of funds, percentage growth rate, and also some kind of slowdown in the rate of outperformance. So when we look at 7-8 years, there is a good deal of outperformance, but not so much in the near term. So how do you see this playing out going forward? What may be your favorite sectors and themes to play? Not calling it ESG investing, but a subset of the ESG strategy. So that would be nice to know in terms of how you see this, and also maybe in the context of Asia and ASEAN as well, apart from the global context.
Absolutely, thank you. And I think that's a good segue to talk about the 7 of the 3, 5, 7, 10. Basically, it's fine to call the entire field ESG investing. I prefer sustainable investing or sustainable finance. Some people call the entire field impact investing. In a way, it doesn't matter what we call the entire field, but what is important is that there are 7 different categories of strategy that investors are using, and they actually perform differently. So, I don't disagree with anything you said. In effect, you have negative screening, which we're not enormous fans of as a primary strategy, and we think that's a large reason many investors don't think that they should participate in ESG investing, because they think of it as just negative screening. It's really the history of the field, going back multiple generations to things like screening out weapons, for example. So we don't have a lot of time for negative screening. It doesn't perform that well over the long term. What does perform well is the opposite, which is basically positive screening, or choosing companies that you think will financially outperform while also taking sustainability seriously. That's the sort of portfolios we build in our classes. They actually often financially outperform. Investors like Generation Investment Management and many others have gotten tens of billions of dollars of money to manage because they've beaten benchmark after fees over the long term. Yeah, totally agreed that performance hasn't been as good of late, but that is, these things have swings and roundabouts. And if we're looking longer term at the rest of this decade, for example, how can you ignore where we're headed as a global society would be my contention. So it's about the next, 6.5 years of financial performance. What do we expect to happen? So that's just 2 of the 7. The other 5 are impact investing, which is really investing in services for those less well off. That's about $1 trillion out of the $500 trillion in the financial system. Thematic investing is super important. That's where you see $1 trillion a year needing to go up to $5 trillion a year for us to actually transition successfully. ESG integrations, where you've seen a lot of the greenwashing accusations, you need an actual formula, not just take in a database and just kind of have it on platforms. Shareholder engagement's a big deal, especially in the West. And minimum standards, we're big fans of. So this is where you can actually bake negative screening into an investment process. Any investment process, it's really about what are you going to buy and why, and once you own it, what is your responsibility, and then what's your sell discipline. And so using minimum standards, we believe not only has a lot of potential in Asia to help with the safety of food and water, all the important things that matter to people and their families, but also that was our suggestion to Comptroller de Napoli in New York State, which they put into their climate action plan. Yale has put that into their fossil fuel policies. And so minimum standards, we believe, has a lot of potential. Anyway, all 7 of these strategies behave differently. And positive, active, sustainable investing, the most recent research we published, and it agrees with what you said, over 5 years, still has been financially outperforming. And do we really expect that that will not be the case the rest of this decade? The other thing to say, especially in Asia, Asia's half of the global economy as we speak, for all intents and purposes, there isn't a lot of good data. And so much like private equity and venture capital, where asset owners, in effect, have to carefully choose their managers to make sure they're in the upper right quadrant of the 2x2 to get that financial outperformance. The same is true with sustainable investing. The better, active, sustainable fund managers are the ones who are experiencing the financial outperformance. The other thing we see a lot of action with is Climate Tech VC. That's a newsletter that we helped start by introducing the 2 principals who were former student colleagues. And we're also doing reviews for the Department of Energy here in the US, where quite a bit of money is being thrown at domestic solutions that need to go global. And that's the 3 of the 3, 5, 7, 10. We really need country-specific roadmaps. Country by country, every country's transition will be different. We need to find the money that's going to need to be invested at large scale in these transitions that will vary by country. And number 3, we need a consensus of people who want those transitions to happen. And the reason that's so important is the 5 of the 3, 5, 7, 10s. Now I've gone through the entire 3, 5, 7, 10 with you. The 5 is the importance of how systems operate. All we have at the end of the day are corporations, investors, innovation, policy, and people. That's the 5. And policy will only stick if the people want it. So here in the US, there's talk this week about how the Inflation Reduction Act would likely get canceled if the next election goes, a certain way. And so a consensus of the people who want the transition to happen is super essential, or it won't happen. It won't happen politically. Policy will be canceled. and it also will affect financial returns for investors. So if people globally want a transition to occur, that will affect financial returns everywhere, especially in Asia. And we fervently hope that the trends in active sustainable investing that we see in the West will occur in Asia, because that way you'll have better societal outcomes matching better financial returns. So we're hoping the same thing will happen in Asia, for the rest of this decade. We expect it will. We certainly hope it will. And since that's what needs to happen, we expect it will.
Thank you. On that note, I go into the next two questions, which are somewhat more provocative and a bit more controversial than the earlier questions. To start with, I want to know your views on the transition financing. Now, this is very, very critical if the world needs to achieve the net zero by 2050. The developed countries have started early in this race. They have got substantial capital. They've unleashed a lot of budget, and they also have a good amount of technology with them. Within Asia, we see China is sort of leapfrogging, but even they have a net zero target only by 2060. The key issue here is, if we go into the past, somehow the global south has been at a disadvantage, and the cumulative emissions all came from the west largely, and a lot of that brunt has been borne by these countries in the form of natural catastrophe and other events that are playing out. So how you think that a fair and just transition should work for developing countries, especially the low and middle income countries, even within ASEAN? How is Asia and ASEAN positioned in this whole transition financing battle? Because if that doesn't happen, the 2050 goals fail for everyone. So would like to understand your thoughts here.
Absolutely. Thank you for that question. I think it's the most important question of all, actually. We're hoping to start something called the Transition Finance Initiative within our Sustainable Finance Institute that has done work in China and convenes asset owners globally for this very reason, how important this conversation is. I think there's been a lot of finger pointing. We had John Kerry in our Yale class 4 years ago talking about the need for the US and China to invest together to help scale up renewable energy around the world, especially in the developing parts of the global economy. So he understands the need for this. But in recent comments, he points fingers at the World Bank and says they should do more. That's fine. Obviously the World Bank has a new president. We do some work with the World Bank amongst the many things we do, which keeps us fresh for our classes to see what's going on. The development banks only finance, tens of billions of dollars a year in total. So, the gap is in the multiple $1 trillion per year. So the development banks can't do this on their own. My suspicion is that we're going to have to get creative on finance, generating new funds that will get invested. So, we haven't been very good at this sort of thing, frankly. The GCF, or the Global Climate Fund, and the commitments the US and others have made to put in $100 billion have not been fulfilled. Who's going to make the decisions about who gets to spend what money on what projects? There's a lot that has not been worked out. We suspect that, we've done research on this, the total value of the financial system isn't well understood. We're just sort of operating in a vacuum in some ways when it comes to what we need to do. Again, it's about $500 trillion based on our research across asset class. About half is in the hands of financial institutions, more than you normally see cited, and about half is in the real economy. So we believe that if we could create $50 trillion over 20 years, we learned during COVID that we could print money and not destroy the economy, and match that with commitments from large financial institutions on a year-by-year basis. We could inject another trillion, 2 trillion into the economy to help turbocharge the transitions that need to happen country by country. A lot of that money should go to countries like Malaysia and Indonesia. There's no question. Prime Minister Modi showed up at COP26 in Glasgow and said, we know what to do. We just need $1 trillion a year. BlackRock showed up and said, yeah, we can do it. We just need the money. I think we really need to roll up our sleeves, understand what the transitions need to look like. And part of it will be innovation. We don't believe, like Bill Gates, that Bill Gates's book on climate change didn't use the word corporation, for example. We believe innovation is important. It might be the 20 of the 80-20 rule. That's why we talk about corporates, investors, innovators, policymakers, and people. We need to push on all 5 of those levers at the same time. We also need to envision what these transitions will look like country by country. A lot of the innovation work is happening in the US and to some degree in China. What about bringing those innovations from Harvard, MIT, and the Bay Area in the US? How about, bringing those innovations in sustainable agriculture and all the other new technologies being worked on, deploying them around the world where these transitions are most important? We believe that's a seriously important opportunity category for the next few years. Same is true from a standpoint of the work happening in the Department of Energy here in the U.S. that I have a small hand in. To get these fundings passed in Congress, all of the work is domestic. Well, that's not really the answer, is it? So I think the rest of the world's looking at the U.S. and wondering, are we serious about climate change if we're only going to try to create domestic opportunities? It's not really the answer. So we really need to be serious about these transitions on a global basis and have, certainly 50 different country roadmaps. Maybe we don't need a roadmap for Liechtenstein and Luxembourg, out of the 200 countries in the world, but we certainly need meaningful actual transition roadmaps for Malaysia and Indonesia and Canada and Australia and every major economy, and to get our heads around that and to agree that that's necessary and get a consensus of the people behind that so that the transitions actually start to happen.
On that note, I want to ask one question which is somewhat relevant here, again pertaining to ASEAN or also other developed economies, maybe developing economies, maybe in Africa, etc., that they usually get associated with negative perception in terms of a deforestation or some stray cases on labor management and so on and so forth. And typically when it comes out in ESG ratings, they are labeled as high risk, etc. But nobody complains in the same way when it comes to the overconsumption in the West or several other issues that exist. So how do you think that this perception needs to be tackled? Because that also, in my view, somewhere affects the transition financing and the overall capital attracted. If you see the overall capital flows in the fixed income or in the equity side of the sustainable or the ESG segment, Asia and ASEAN lag quite a bit. I mean, if we remove China and to some extent Japan, I think the overall flows are very low. And I think this is because some of these countries suffer from the perception created by the media, not necessarily so much of that is the reality.
I totally agree with you, and you and I are very like-minded, as we know. I'll give an example of another example of how oversimplification can be a problem. So one of the largest contributors on a sectoral basis of global carbon emissions is transportation. So there's a big push to create electric vehicles, electric trucks, perhaps driverless someday, we'll see. But slowly but surely it's becoming clear that this is going to require a lot more mining, a lot more metals. This may turn out to be the decade where if you invest in the right metals, you make the most money. We've spent some time looking at deep sea mining, for example, where a very small part of the Pacific Ocean floor off of San Diego, California, there are these polymetallic nodules with manganese, copper, nickel, cobalt, just sitting there waiting to be harvested, and it can be harvested ethically, much less damaging than continuing to go into rainforests in Indonesia, or watch a video on Norilsk in Russia sometime. So you have NGOs that will jump up and down and say we shouldn't do deep sea mining. So what are they saying? On the one hand, we want more electric vehicles, and on the other hand, we shouldn't do anything at all when it comes to deep sea mining. I don't think we're always being realistic. There's a lot of complexities, as you mentioned, with nuclear and gas. There's always complexities, and we have to be more realistic when it comes to these transitions and understand what it's really going to take. And another common denominator is people. So to your point about how people can use different phrases, but if you think about people and how people are affected throughout supply chains, and how people are affected in communities and in countries and in societies more generally, and how whether people are being pulled out of poverty is important in many parts of the world still. Even in the US, this is becoming an issue. So I think there's a danger of oversimplification that many in the West will jump to talk about divesting from fossil fuel. Well, I don't think you hear about that much in the ASEAN region, would be my guess. I never hear about it, and obviously I do a lot of work in China. They'll look at you strangely if you mention the word divestment in China, I would imagine. So I just don't think everyone's been totally realistic about what these transitions will mean. How do we work through all these complexities? And yes, the ESG data isn't helpful when it comes to understanding Asian companies and what they really need to do, what countries are already doing when it comes to deforestation. I think people, it's a human nature thing. People care, they care about an issue, and they see little snippets on social media about elephants or what have you, and they overreact. They don't have all the information. So it's important to do your due diligence as an investor. So if you're interested in a particular issue, to do proper due diligence on what the transition will actually look like. Because one of my favorite sayings is, be careful what you ask for. You might actually get it.
Okay, before we take the audience questions, which are with me, quite a few, I'll ask one quick question to Professor on the green industrialization. So the battle for green industrialization has started. If we are moving away from the oil and gas economy, we are getting into the mineralization, and a lot of big budget has been unleashed by the US, by the European Union, and also by China. China, in fact, controls most of the supply chains and the mineral chains, resources in the world today. So if you need renewables, the answer is to go to China. If you need the battery and the associated minerals, you need to go to China or China control areas. So it's also going to be a sort of geopolitical play over time. Now here, how do you think ASEAN can emerge and secure its own future in terms of this new energy security? Because every country in ASEAN is not endowed with oil and gas or the battery minerals. And in terms of becoming a valuable source of supply for the world in the long term, what all work it needs to do? What are your thoughts around this? If there are any specific suggestions on policy or any other steps to be taken by the corporations and so on?
Yeah, absolutely. I can offer a few thoughts, certainly. If you look at Europe, for example, and we're not talking about Europe today, but for whatever reason, you look at the European stock markets, they don't tend to have major technology companies. You don't see that in Canada either, or even Australia, for the most part. So, one thing that I think is really important is to try to envision what the economies of any particular country could and should look like. How to take part in the innovation that will be needed and have that be locally beneficial. How to actually participate in what's really a major technology revolution of our time. Companies like not only Microsoft and Apple, are worth trillions of dollars. Now we have NVIDIA, apparently in a coffee shop, two guys decided that, they would be able to, take part in a major secular move towards artificial intelligence and chips, for those. And we had students who presented that company to us a few months ago, and it's skyrocketed in financial value. Why aren't more of these types of companies being created, outside of the United States? So I think one important thing to do is to look sectorally at a country as part of its transition and figure out how it can participate in this, global revolution. The Amazon, the Amazon of Asia has been Alibaba. Maybe there should be one in ASEAN and so on. So I think that's one thing to do, is to be intentional and maybe partner so that local unicorns can come out of this wave of innovation and technological development that we're seeing. It should be experienced globally. Another thing is to play to your strengths, and that's become very clear in my mind. Europe has a certain culture, the US has a very different culture, different again from Canada, and certainly it's hard to completely reinvent countries. So another thing to suggest is to play to one's strengths. So, Indonesia is a major source of nickel, and, there's a long history of the West just taking resources, right? So, certainly there should be more local ownership, and the Norwegian model of, the reason Norges Bank is over $1 trillion, second largest asset owner. Basically, the oil revenue, ever generated in Norway, is owned for the citizens of Norway. Some people talk about a resource curse. There's no resource curse in Norway. They develop the resources, and the proceeds are shared by the people. So, there'd be a different model that would make sense for each Asian country in all of these instances. And also, so all we can do is learn from what's working and try to play to local strengths and try to create these exciting opportunities locally as much as possible. Impact investing can help, but is it really scalable? Is it really helping people? What's really necessary here? So we have a lot of time for people like Mark Mobius and others. When he was at Franklin Templeton, he was the largest owner and fund manager of Asian public companies. He has his own firm now, and he's talking very similarly about the need to invest sustainably while doing proper due diligence and seeking, outsized financial returns. So, on the policy side, there's a lot that can be put into place. At the end of the day, the most important thing for me is to make sure there is an upside, to make sure there are innovation opportunities that are emerging in the region, and not just here in the U.S. That's completely lopsided at this point, and that's going to be a new inequality problem that people aren't talking about, but I'm sure they will soon. The value of U.S. markets on a global basis is outsized as we speak. Why should the U.S. be 60% of financial value or whatever it is? It's completely out of whack as far as I'm concerned.
Thank you, Professor. We get into some of the audience questions now. Try to take as many as possible. The first one is, what's your view on banks coming out and saying no funding for fossil fuel? This has stopped new capacity, which could drive prices up.
Yeah, I'm not a big fan of divestment. So I pushed back pretty hard on the whole concept of divestment 10 years ago. There's actually a piece of research out of Yale talking about how negative screening, which this is a version of, might actually be damaging to the transition, published by Kelly Xu. I think banks will need to transition over time. To just cut off investment is not really the answer as far as I'm concerned. We have to envision these transitions, and we have to recognize that we are going to use fossil fuel, for the foreseeable future. We shouldn't overinvest in unprofitable projects. Jeremy Grantham 10 years ago at an event said he wasn't worried about Alberta because it wasn't going to be financially viable. There is something of a high cost, high carbon correlation. So why don't we go after the low cost, low carbon fossil fuel and go after fossil fuel efficiently? So, again, this is one of those complexities and nuances where, sure, longer term, we are going to do, some version of China's dual carbon paradigm, and, peak on carbon and then go carbon neutral. Can we actually go carbon neutral in time is a big question. But just cutting off financing is not the answer. We should start with the question, how do we solve climate change? And I don't think we solve climate change by just cutting off from investing in certain things. So we need to willfully envision and enable necessary transitions, or it's not going to happen.
Okay, the next question is, large emerging economies' ESG roadmaps are key, but developed countries have benefited from decades of non-ESG practices. Is there a way to reconcile this?
Yeah, no, these are all great questions. Thank you. There's a danger to not paying attention to ESG. So it's fine to get away with certain practices, per se. Indentured slavery comes to mind. The world is increasingly transparent, right? So there are satellites that can monitor methane emissions, and Turkmenistan is a major source of methane emissions that we now understand. The US government's trying to negotiate on that. As transparency increases, so does risk. So our research shows that whenever a company gets caught in a scandal, it can lose half of its value. So ESG is already extremely financially relevant to manage for. So if you're managing for ESG issues, you're preventing reputation risk, you're preventing the potential collapse of share price and value of an investment. So as far as we're concerned, it's already mandatory to manage for ESG risks. And then the question becomes on the opportunity side, are your competitors going to outdo you by getting ahead of the curve? We saw this with DuPont, decades ago when they were negotiating away from damaging chemicals. At the same time, they were innovating and they were ready to move forward, unlike Imperial Chemical, the UK company that got caught unawares and suffered tremendously. So be careful to rest on your laurels. You might be the next Xerox.
Okay, another interesting question is, probably taking a clue from what you mentioned in one of the answers. Given we need to solve the demand problem to overcome fossil fuel issue, what else can be done to move the mass psyche on this subject?
Absolutely, great question. At the end of the day, half of the people or more really care about themselves and their families and their well-being. Can they provide? Can they thrive? And so the opportunities need to be manifest, locally where you all are. The need for more electric vehicles and all the supporting infrastructure, that needs to be a financial opportunity for people. It needs to be seen as the next great job, the next great financial opportunity. The more that these opportunities manifest, the more people will get behind them, and then this will create a tidal wave for the transition. If people are worried about losing their jobs and that there'll be a slowdown of the economy and that there'll be a major loss of investment, then the transitions won't happen. So it's imperative, as far as I'm concerned, to make sure people understand that it's for their own financial benefit and for their family's financial benefit that these transitions not only happen, but that they participate actively as investors and as employees, and that their futures and their children's futures are tied to these outcomes. And then you have a positive dynamic that can solve societal challenges while making more money that's the sort of dynamic that we think can and must work. We believe it's the only way forward, actually.
We have probably time for 2 more questions. One of them is, what's the role of nuclear in energy transition? Does Asia just skip coal and progress to solar and wind?
Yeah, it's a great question. We've hosted events on this at Yale. Nuclear can be part of the transition. There are challenges. Nuclear is very expensive. The more recent nuclear technologies are more advanced, less risky. Of course, it also matters where you are. If you're in Japan, for example, you're on the ring of fire. So, if you're a country that has a lot of seismic activity, maybe tsunamis, unfortunately, then just installing a bunch of nuclear power plants may not always be the answer. So it's going to need to be situation specific. Ramping up on wind and solar and other creative energy sources, geothermal, and there's a whole bunch of new things emerging, is going to need to happen as quickly as possible, especially, countries near the equator where there's so much solar, just beaming down all the time, waiting to be captured. Certainly we're seeing more and more projects in the offshore wind category here in the Northeast US, and that needs to happen more as well. Again, this comes down to, country by country coming up with what can actually work. And, many of the leading voices in the climate negotiations have talked about the need for more efficient use of coal. Perhaps that would help in some circumstances. Ivo de Boer, who preceded Christiana Figueres, believed that. Others, like Mark Mobius, have talked about that as well. In a region like, where much of ASEAN is, where coal remains the cheapest option, we have to be realistic about what we can and can't do. So the roadmap that needs to happen, certainly needs to be mindful of, what can happen when, and what can we actually ramp up, and what innovations could help in 5 years and 3 years, and try to make it happen as hard as we can.
Okay, probably we are heading for the last question of this session. Professor Carey, do you think electric vehicles are really the green solution which the auto industry wants us to believe, looking at it holistically?
I could talk about this for a long time. I would say that at times, when you look at innovation on a country-by-country basis, I'm not always convinced the German auto manufacturers are behind the transportation transition that's necessary. It's being pushed super hard in China. China buys more electric vehicles than any country by far. BYD has rapidly gained ground and largely has surpassed Tesla, according to many. And so, again, I'm not a believer that one thing is going to solve all these problems. We need to do 100 things at the same time. We definitely need more electric vehicles. We need more supporting infrastructure. We need better battery storage capacity and technology. We're going to need to ramp up in 100 different ways at the same time. This presents enormous investment opportunities and enormous opportunities on a regional basis to install and benefit from the implementation of innovation. But as we look across, what companies will be at the end of the decade, which ones will be successful, which investors will be most successful, which innovators will be most successful, what do people actually want? It all ties together. And so our strong expectation is that the winners in whether it's electric vehicles or any sector, will be those that take hold of these opportunities and run with them, because we believe we're in a paradigm of a need for more sustainability and financial outcomes running in parallel. And we believe it's the only way forward for the ASEAN region and for the world in general.
Thank you, Professor. That was the only time we had got, just 15 seconds to go. So thank you so much for staying up late in New York, answering so many of our questions with a lot of candor lot of details, examples, and I'm sure, given the vastness of the subject, ever-evolving nature, we can never get enough. But thank you so much from all of us at Maybank for taking this session. Thank you once again, and good night.